Are you looking to take on a little bit more risk in your portfolio? There may be opportunities in high yield in the midst of this uncertain economy and as spreads start to widen. But how attractive is it today? We'll find out right now on UBS Trending. And thanks for joining us, everybody, on today's show. My guest is Alina Gallant from the Chief Investment Office. Alina, great to have you join us today. Good to see you. Today we're talking about high yield bonds. And before we get into where you see opportunities for 2023 and talking through, of course, a lot of economic uncertainty, which is really the topic du jour these days, just give us a little bit of a 101 for those out there who may be interested but aren't quite familiar with the high yield market.
So let me explain what the high yield market is. The high yield market consists of publicly traded debt. So these are bonds, but they are bonds of lower rated companies. So these are companies rated BB plus or lower, and they tend to be riskier than their investment grade counterparts. So they could be smaller in size, they could have higher leverage, they could be more cyclical, just generally contain more risk than some of the larger, bigger rated companies, better rated companies. Now let me give you an example of one. Right? So airlines, for example, they got downgraded to the high yield market in 2020 because of the financial difficulties. We all remember what travel was like back during COVID.
Basically non-existent.
So that's a good example of the type of company that got downgraded to the high yield market.
Right. And when we say downgraded, we're looking at the ratings agencies like Fitch, S&P, Moody's. They look at each company or a municipality and they determine whether or not it's too risky, and then they rate it below investment grade. So that's when you know it hits the high yield sector, in other words.
Correct.
Where you're getting a higher interest rate as a reward for the risk you're taking on.
Correct. So the reason to invest in the high yield market is you're taking on more risk, but you're getting a higher yield or a higher reward.
Right. So it's not for the faint of heart. And obviously we always say, and I'll speak right to the camera, you always want to talk to your financial advisor to find out if investing in high yield markets is right for your investment horizons. But that being said, okay, so for those that maybe do want to or can take on the risk, let's talk about what's going on right now. What is your view, Alina, of the high yield market today? And obviously, we're looking at a 2023 that has some uncertainty in front of us. Will we hit that recession that some people are expecting, economists are expecting? What will the Fed be doing over the next couple of meetings, et cetera? So what's your view given the backdrop on high yield right now?
So we actually think that high yield bonds could weaken from here. And the reason is, as you mentioned, it's the economic uncertainty. So we think we are going into economic slowdown. We think revenues could decline. We think margins are likely to compress for some of these companies. Leverage would rise. And we think defaults are going to pick up this year. Now, having said that, valuations are actually not that wide in high yield. The spreads today, which is typically how we assess the high yield market, so the spread today is around 425 basis points. Believe it or not, that is actually below the historical average.
And that's the spread between high yield and investment grade?
No, that is the spread between the high yield bonds or the high yield index and the treasury rate.
So the benchmark.
The benchmark.
Got it.
Exactly.
So when you look at something like, you said 425, which is about historically average versus treasuries, we've seen 900 basis points back in 2015 and 16 during the commodity crisis. So that's a much larger spread. And I know it's been larger during other periods, but that's not the norm.
Correct. But I think it's important to point out that during periods of market volatility, spreads do tend to widen to very wide levels. So as you mentioned, the commodity crisis 15-16, we went out to 900 basis points. Last hiking cycle, 2018, we went to 540 basis points.
So 425 being the average then. So that being said then, is that directly tied to the uncertainty that we have in the economy? In other words, are high yield bonds more susceptible to economic uncertainty and the crisis that we've come from and maybe where we're going?
I definitely think that's true.
Right, okay. So that being said then, where do you see opportunities right now, especially in high yield? Is this a good time to maybe start looking into them? Because as you said, the spread is pretty tight right now. But is this a time to be looking at high yield?
So let's put it this way. I definitely think that there will be opportunities to invest in high yield this year. I just don't think that we're there yet. And the reason we're not really there yet is it's just valuation is not really there. But I do think that spreads could widen from here. And actually, we could be at an inflection point now. There are some technical indicators that are pointing to the fact that, maybe there's some headwinds ahead. So first of all, we had a big rally in high yield year to date. During the first 2 weeks of the year, spreads tightened by 60 basis points. But over the past 2 weeks, they've kind of flattened out. Then we had a lot of new issue supply. We've priced $15 billion of new debt in January. This is a big pickup from the second half of last year. I think if the market stays strong, you're going to get more supply. And then we're also starting to see outflows in high yield. So putting all of that together along with our economic outlook, I think you could see spreads widen. And when you do, there are going to be opportunities in the high yield market to pick up really good yield.
Okay, so let's drill down individual sectors there. You mentioned airlines at the beginning of the conversation that suffered greatly in the beginning. It seems like travel is picking up. I was on an airplane myself recently, and it was pretty packed, and the airports were pretty packed. Where do you see opportunities individually from a sector level?
So 2 things. First of all, what typically happens during market downturns is there are dislocations. And you know the saying, the baby gets thrown out with the bathwater?
Was it those famous financial services expressions that we always use?
Exactly.
That's right.
So what's going to happen is good quality companies are going to widen out along with the rest of the market. And so that's where the opportunities are for our investors, to invest in good quality companies with clean balance sheets, good liquidity. So you mentioned airlines. Airlines is a good example of that. There are airline companies that are still benefiting from the recovery post-COVID, from the strong travel demand. They're generating free cash flow, and they're going to be using that to pay down debt. Let me give you another example. Energy companies, right? They're benefiting from high oil prices, generating positive free cash flow. There are industrial companies that maybe are a little bit more cyclical, but they have very low leverage, good liquidity. They're going to be able to withstand this economic slowdown. So once spreads widen and you're getting attractive yields, that is a very good opportunity to put into your portfolio.
Is any of this contingent on inflation continuing its decline? I mean, it looks like the International Monetary Fund actually said that inflation has peaked. They're expecting global economy. They raised their outlook for the global economy. Is this contingent on that path continuing?
It's contingent on rates, right? We all saw last year that the fixed income market in general is very volatile when rates tend to rise. So as long as we're not seeing the kind of volatility in rates that we saw last year, we should be okay from that standpoint.
Terrific. Alina, thank you so much. And I know there are a lot of folks out there who are watching who maybe are even thinking, I should probably pick up the phone, talk to my advisor, and start looking into outlook, or start looking into high yield as a way to put into their portfolio, as your outlook has so told them so. So thank you, Alina. Good to have you here. It's great to have you join us, and come back for more. I know there's a lot to talk about in this particular area for investors.
Thank you so much for having me. It's always a pleasure.
Thanks, Alina. And for more information, you can always check out our website, ubs.com/views. There's lots of content out there from Alina and the rest of the Chief Investment Office. Plus, you can find a lot of our content also on social media, LinkedIn, Facebook, Instagram, and Twitter, for example. Plus, all of our past UBS Trending episodes are available right now on demand. So if you missed any episodes, you can go back and watch those as well. And if you have any questions, as we've said, make sure to reach out to your individual financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great rest of your day. And remember to keep your eyes on what's trending. Thanks, everybody.